Welcome to the Self-Storage Insight Podcast. I'm Ben Shirey, and in today's episode, I wanted to talk about disputed transactions and chargebacks when you're processing a credit card for one of your tenants and how that whole process works and what is the best way to follow up on these transactions. What is the best course of action to take when you see a disputed transaction from one of your tenants come through? And so there's a lot of confusion. There's a lot of questions around what these are. How should I respond? How do they work? And so I want to just provide a little bit of context around what are disputed transactions, what does it mean, how does it happen, what should you do? And so we'll kind of start off with what is a disputed transaction. Essentially, your customer contacts the card issuer or their bank and says, hey, this transaction doesn't make sense to me. My card must have been stolen or compromised, or I don't recognize this transaction. I've never seen it before, and I want to dispute this transaction, or I want to say that it's not a transaction that should have happened. And so then at that point, the card issuer or the bank will open up a dispute, and they will pull those funds from your account. So the way that it'll look for you as the business owner is all of a sudden you'll see a debit come through from your card processor. You'll lose $100 or whatever the amount of the transaction was, and that money will be put on hold until the dispute is resolved, right? And so what does that process look like to resolve a dispute? What's going to happen is the card issuer is going to pull those funds back out from your bank. And so that money gets put on hold, and that money gets put on hold for a 14-day period where they will collect information on the dispute. So you'll have 14 days to respond to this dispute to prove that you were legally charging this transaction and that it should have happened, right? So you get a 14-day window to respond to this dispute. Then once the evidence is collected by the card issuer, they're going to review the evidence for a review period, and that period typically takes 14 days as well. So these funds are put on hold for 28 days. At the end of the review period, once they've reviewed all the information and they've made their rolling, they will either give those funds back to the cardholder, or they will give those funds back to you if you proved successfully that you had the right to run that transaction and that it should have happened. And so what that means for your business is when this disputed transaction comes through, most likely at best case scenario, if you have to respond to the dispute, and the reason I say that is there's another way around this, is that if you have to respond, your funds are put on hold for 28 days, probably at the shortest. Typically it's going to be 28 to 35, somewhere in that range is when you're going to get that money back if you win the dispute. So let's talk about why these disputes happen and some of the most common reasons for seeing a disputed transaction, and then we'll talk about how to resolve them in different ways. And so the most common ways that we see transactions get disputed in self-storage is mainly one of three ways that we commonly see, and that is, first of all, the cardholder, their card gets compromised. And so when they see this, they see some transactions come through that they don't recognize. They immediately contact their card issuer and they say, hey, these transactions are not legit. My card's been lost or stolen or whatever. And immediately from that point on, the person that's on the phone with them opens up that dispute, but they will lump other transactions in. And so what they'll do is they'll say, okay, you didn't recognize this transaction. Do you recognize these transactions from this day? And they'll read off some of the statement descriptors, and you can dispute multiple transactions as part of this cardholder dispute when they're talking to their card issuer. And a lot of times your transaction gets lumped in because the customer service rep is just reading off other transactions or other amounts, and they just say, yeah, you know what? I don't recognize any of these. Let's just get me a new card issued, dispute all of those transactions from the 15th on, and then they'll catch up on whatever bills they owed once they get their new card. And so that's a very common way that cardholders use this process, right? They'll dispute multiple transactions at once. They'll get a new card. They'll pay the bills that they need to pay. Well, as part of that, other things are happening, right? Your funds are getting pulled, but the cardholder does want to still pay their rent. They don't actually want to go delinquent. It just got lumped in with all these other transactions. And so that's one of the ways that we commonly see it. Another way is the tenant is trying to burn you. They make a payment with their card. They reach out to the card issuer and they say that transaction was not legit, and they clean out their unit and they try and get away from you as fast as they can. So that way you're stuck with the bill. And so those transactions we want to respond to, and we'll talk about how you can make sure you win those transactions or win those disputes. And then the third way is we've commonly seen where when you're switching processors or anything changes within your card processing, where your statement descriptor will show up differently. And so when your statement descriptor shows up as, John Doe storage for years, and then all of a sudden you change processors or you move to a new software that processes, and all of a sudden that statement descriptor shows up as, just your name now, since something got put into the application wrong when you were filling out that merchant application, or for whatever reason that statement descriptor changes. Your customers all of a sudden see this transaction come through and they're like, I didn't authorize this. I've never seen this name before. This has never come up. They look at their history. They don't see a transaction like that in their history, and they'll dispute that transaction. And so I'm going to talk about those three things and how do you win those specific transactions when they're disputed, win that money back. So let's start off with the statement descriptor being incorrect. The best thing to do in all cases, no matter what the issue is you have that 14-day window to respond to the dispute. The first 7 days, you should be trying to contact the customer and get the customer to drop the dispute. It's the fastest way for you to get your money back. It also works in the customer's favor most times is, I reach out to the customer. They didn't want to dispute the transaction. They do want their stuff and they don't want to go delinquent. They're going to pay again. They can contact the card issuer again and drop the dispute. When that happens, that comes across, the dispute gets dropped. You don't have to respond to it, and the funds go back into your account after the processing period of 1 to 2 days. You're going to have that money back. So typically you can get that money back within a week if you can get a hold of the customer. They agree that shouldn't have been disputed, and then they actually reach back out to their bank to get that dropped. So that's the most effective way. That's the best way for your business. That's the best way for your cash flow. On the other side of that, if you're not able to get a hold of the customer and you have to respond to the dispute, when we respond to the dispute, we want to make sure we win these disputes, right? We don't want to submit insufficient information and ever risk losing one of these disputes, right? So when you find out that you have a disputed transaction, the processor isn't going to give you a whole lot of information on what you should include. They may include a couple lines of, include an invoice or something that's, to show why you ran the transaction. However, there are things that can be included to ensure that we win these transaction disputes. So what we always recommend first off is if you have a wet signature lease or if you have a click to agree lease that was signed online or agreed to online, make sure you have a copy of the lease that shows the lease terms and that also shows the customer's name. And make sure that that is included in the packet of information that you submit. There should always be a lease with it that shows why the transaction happened, what the billing terms were, all of that, right? And so include the lease as part of this response. Always do that. Then on top of that, we always want to include the invoice for that specific transaction that ran, as well as the payment receipt showing that payment receipt belonged to that invoice and that transaction was valid. There was an invoice in your system. It belongs to a lease. And so that flow makes sense. You're going to win most of those disputes. We usually go one step farther. So with CC Storage, whenever I hear from our customers that a dispute happened, I get a notification through the processor as well on all of them. And I help our customers respond, or our team works with them to make sure we provide the right response. We also go back and we provide a snapshot of that customer's payment history as well, showing that this customer, if they're new and it's their first month, obviously you're not going to be able to include that. However, if they have a payment history, include the payment history showing that this is not the first time we've charged this customer. They've been leasing with us since whatever date the lease says, and then we include a bunch of payments showing that they were a customer for a long time and that this was just a mistake. If we provide that information, we will win that dispute, right? So make sure when you respond to the dispute, you include sufficient evidence, and we always want to include the lease, the invoice, the receipt, and if possible, the payment history to guarantee that we win that disputed transaction. And so when we win, again, 28 days later, you're going to get your money back. And so it doesn't take very long to respond to these, but the money's just going to sit there for a while, right? And so then the third side of it is we don't respond to the dispute at all. So if you're not going to respond to the dispute, you for sure have lost that dispute and you need to recharge that customer for the funds. We never recommend just going into your system and recharging the card that they disputed the transaction on. That looks really bad. You're going to need to get an updated payment method to charge, but that customer owes you money right away, right? So you're not going to try and win the dispute. You're saying you're going to get your money back through the processor because you disputed that. You now owe us money right away. Make sure that other payment got voided out of your system. Those invoices are now past due back to whatever date their due date was, and overlock that unit until you receive a new payment method or until you can work that out with the customer. So that should be the first thing that you do on all of these disputes is typically if I see a dispute come in, overlock the unit because we have to work out whatever issues it is because if I lose this money for whatever reason, that tenant is overdue and I'm locking that unit right away. So just a couple of things on what happens if you don't respond though, right? So if a payment gets disputed and you don't respond, there is other risk that's involved with this. For sure, you're losing your money. and you need to figure out how to get money from the tenant. But as well as that, there is also risk involved with your processing account, where if you have multiple disputes that you lose, they are going to flag your account and they are going to put some sort of safeguards in place to make sure that they don't get burned, or, because of the risk of your business with these disputed transactions. And so a couple of things that we've seen them do is they'll put a reservation in place. And so you'll have a reserve on your account to where you have to deposit or you have to process a certain amount of funds. They'll put them into the reserve. And we've seen this anywhere from like $500 to $10,000. And it really just depends on how much volume your business does. There's a wide range of there's a lot of factors that are going to go into that, but they'll put some money into a reserve. As soon as that reserve is met, then they pay out your funds back on a normal process of everything that's over that amount. So if you have a $1,000 reserve put on your account, the first $1,000 that you process after they put that reserve in place is going into this reserve, and you're not getting those funds until the risk gets lowered on your account, and it's going to sit there, and then they're going to pay out the transactions that happen above that amount. So $1,000 is on reserve. That definitely affects your business's cash flow. It definitely affects your business. You don't want that to happen. So we always recommend responding to these disputes. The other thing that could possibly happen that we've seen happen with other businesses is, you're probably getting next day funding or a 1-day funding hold, and then your transactions are being paid out into your account within 2 business days is pretty standard across self-storage. And so they will actually increase your hold times, and they will pay you out on a later date. So for example, if your transactions run on Monday, they might move you to a 3-day hold, and those transactions won't pay out till Thursday. And we've even seen it go as high as 5 days, depending on the risk of the account. And again, every processor is going to assess this differently, and they're going to implement different things. So, some of them will scale it up where it's like you're on a 1-day funding hold, and then after 2 of these transactions come in that you don't respond to, it'll happen pretty quick. If you don't respond, they don't like that. 2 of these transactions come through that are disputed that you don't respond to, they'll bump you to a 2-day hold. Another one comes through, they'll move you to a 3-day hold, and so on. So you definitely want to be responding to these transactions and making sure they get resolved. Talk to your processor, make sure they know that you're working on these things, and that it's not just people are disputing transactions and you just let them sit. That's the worst thing that you can do with your processing company. So I just wanted to provide a little bit of information around this. A lot of people are super confused about when a dispute comes through, what should they do? What should they include? Why does it happen? And so hopefully some of this information was a little bit helpful to you about understanding the payment and how it works when a dispute gets filed. So if you have any other questions on that, please reach out to me. You can reach me, ben@ccstorage.com. I'm happy to talk to anybody about anything in self-storage, really. So if you're an owner, operator, manager, and have some questions, please feel free to reach out. Happy to connect. We're going to introduce another segment of the podcast that we're going to be plugging into every episode, where between Matt, my colleague, and I, we talk to tons of self-storage owners. We hear a lot of cool ideas that are just short conversations, but the people don't want to join the podcast to share their ideas. And so what we're going to do is we're going to do a segment called the Owner's Playbook, and we're going to talk about something that we heard in conversation with an owner that was just a cool idea. It comes from somebody else. It's not necessarily from us or something that we experienced, but just something that we heard. And we're going to introduce that into the podcast just in a short segment. And so check out this next segment. It is going to be the Owner's Playbook. In this segment of the podcast, we are going to call this segment the Owner's Playbook, and that is because we are taking something that we heard from an owner in conversations over the past week, and we're going to bring it up on the podcast, share an idea, share something that they implemented that we thought was pretty useful, that would be useful to other businesses. So, Matt, in conversations that you've had with owners in the past week or so, what are you hearing?
Yeah, so, in the past week and even prior to that, people were always wondering how they can implement dual pricing with their software when they transition to our software. And a thing that comes up a lot without me even recommending this is instead of implementing a rate increase, they're going to go up 8%, 10% even, I've heard, implementing a 3.99% card fee or an even less ACH fee of $175. It's kind of a win-win for the owner and for the tenants. They don't have to eat that cost of processing anymore, and the tenants don't get quite the increase they were expecting. So
right, and with that too, like the actual cost for processing for businesses in self-storage as a standard is right around 3%. Yeah. So implementing differential pricing where you're passing those fees on to your tenant is going to increase your NOI by about 3%. Across the board. And it also, though, doesn't come across as a rate increase to your tenants because it gives them options.
Yeah.
Right. If you implement a rate increase, you're for sure going to see move outs. A lot of times with rate increases, tenants are talking and saying like, they're increasing my rate, but they're not doing anything to improve the facility. Like, why are my rates going up? you're for sure getting move outs. Like on an 8% increase, you're going to see at least a 5% move out rate in this area at least. And so what are people seeing in terms of move out rates due to implementing differential pricing?
Across the board nationwide, almost a 0% vacancy rate due to implementing our software. The thing is that these tenants are paying these fees elsewhere.
Right.
I even share screenshots when I pay any of my utility bills. I pay a credit card bill, my mortgage, my car payment, literally everything I pay. There is a flat $4.25 fee or a 4% fee. So people are already paying these fees to other businesses. Why is it fair that they're not going to pay a facility owner to, eat that cost?
Right. And one of the other ones I hear on that same side too is like, well, I don't accept cash and check, so I can't implement differential pricing because I'm not giving them the option to pay cash and not pay that fee. And so with some of the owners that I've talked to, what they've actually done is they've absorbed the cost for ACH since it's lower, and then they can keep the tenants' rates the same. Most of the tenants are not going to want to put their bank account on file anyway. It's just, you just aren't going to see it.
I'd say 98% of our customers' tenants pay with a card.
Right, for sure. Even when you give them the option of the lower option with ACH, they still don't want to do it. And so when the owner says they're going to absorb those costs, the tenants are still most likely, in most areas, and there are some areas that are a little bit different, but in most cases, they're still putting a card on file and just absorbing those fees. Tenants are used to it. I mean, I was at the ball game the other day with my son, cashless facility. We're at the Bryce Jordan Center for a Penn State basketball game. Cashless, you can't pay cash, and they increased my checkout, my price of checkout, to accommodate for these fees. So it's something that everybody's getting used to, everybody's seeing it, and when you implement it, there's a process too that we follow where we send out a letter, we do notify them of the change, we give them the option, which they love, because then it's not like, oh, move out or pay this rate. It's like, oh, I have options now, and they're still going to choose the easier option for them, which includes the fee. So
I have to throw in there that we were at Northwest Stadium too, watching the Redskins, and same thing, cashless facility. I think that's pretty much everywhere.
I'm not sure if you can say Redskins on the podcast. No, I'm just kidding.
I did. But yeah, it's and even if you don't see that fee on top of the transaction, that fee's in there. They're not absorbing that cost.
Right.
No one is.
Right. Yeah. And I've heard that a lot too, of like, hey, don't implement differential pricing. Just raise your rates to cover that cost if you don't want to pay it anymore. But that's really not giving your tenants an option, and then at that point you're just implementing a rate increase, and that's going to give move out. That's going to hurt your occupancy rates.
And typically it's $1 or $2 more than they're actually paying in processing.
Right.
So to be fair across the board, just add it on top.
Yeah, absolutely. And giving them the option is what customers want, right? It is the consumer's choice to be able to have those options. And so, awesome. Great tip. Thanks, man.
Yep.
Thank you guys so much for listening and tuning into the podcast. We hope you enjoyed this episode. This episode was brought to you by CC Storage. CC Storage is a property management software that can be utilized by your business at no cost to you. Pass the fees for credit card processing onto your tenants, increase your business's revenue, no software fees, no contracts, no per unit costs, no surprises. So hope you check out CC Storage as the sponsor of our podcast, and we hope you tune in to the next episode. Thank you.